Let's kick it off with the final hour of trade, our closing bell exchange. Joining us here is Paul Dietrich from Fairfax Global Markets, Matthew Cheslock from Virtue Financial, and Rick Santelli from the CME Group in Chicago. So, Matt, it seems like today the focal point is the U.S.-China trade talks, which are back on in Beijing. Is there optimism?
There certainly is optimism when China sends such an important figure, to be the delegate. That was a sure sign that the market was going to respond positively this morning. But as you mentioned earlier, we lost a lot of steam right at 150 today when the news broke about Trump, talking about national security. So it's not a coincidence. The market. Why is that?
Just the feeling that we're going to go on a longer shutdown? We're in day 17.
Potentially we'll see how argumentative this becomes, and that's been one of the major sticking points. So the market does not want to see that right now. We want to focus on the positives right now. We've seen the market have a 900-point move in the last 2 trading days. Why is that? It's because of optimism in China.
Matt, previously traders like yourself used to say, shutdowns don't matter so much. Are we starting to think that this one does?
The market hasn't reacted as such. I think the longer it goes, the more it's going to hurt the economy, the psyche of the American public. But I don't think the market itself is really looking at a shutdown, at least from the trading aspect of it.
Paul, are you surprised to see the rebound we had on Friday and today, or do you think the S&P 500 is undervalued now?
I think it's definitely undervalued. If you look at its kind of long-term forward PEs, and you can't look at trailing PEs anymore because they only reflect 3/4 of the tax cut. We're at about 14.1 forward PE on the S&P 500. The historical average is about 14.6, 14.7. So this market is really undervalued.
So what are you guys doing at Fairfax?
Well, we're looking at trying to look at the best stocks and buying them now at low valuations. Apple is as of Friday, was at a forward PE of 9.9. I can't remember when that has happened. And you look at even Facebook is at 15, which is kind of like at the average of the forward PEs. Even Google is at 21, which is just a little bit above. Then you look at Disney, 14, again, undervalued, one of the great brands. You got Verizon at 11. You got Walmart. This is a great time to buy.
Just to dive in quickly on one of those, on Apple, are you fearful at all that their recent issues are not so much something that may prove to be temporary, China, and something more structural, that the smartphone boom phase is over?
No, I don't believe the smartphone boom phase is over, and I'll tell you why. I think this year is going to be a little bit tough for them, 2019. Why would anyone spend a lot of money for an iPhone right before 5G is being rolled out into the United States? And I've been to South Korea where they have 5G. It is a breakthrough. It is unbelievable. There are apps and services that we can't even imagine here in the United States because we don't have 5G. It's going to take apps that we use every day and transform them once we have 5G. It's not just about super fast streaming. It's not coming in until, middle of this year. Apple will probably put its first 5G phone in at the end of the year. So 2020 and 2021, think about this. Everybody who has an iPhone in the world is going to have to get a new one because nobody's not going to want to have this 5G technology.
So looking for catalysts, broadly speaking, Rick, we did get the services number, hit a 5-month low, which you brought us earlier. It's a busy week. We get minutes. Powell speaks again on Wednesday. CPI data. What sort of signals are you getting right now on the economy front?
Well, I think I was impressed today with the U-turn in rates. Now, it wasn't large, but we did see some nice reversals. We're back over 2.5% in 2s, 3s, and 5s. And with respect to 30-year bonds, the longest maturity, it's about ready to test 3%. So we're moving higher on the high yields of the day. I also think $78 billion in supply with 3s, 10s, and 30s Tuesday, Wednesday, and Thursday is going to be very important to monitor, especially after yields have dropped so dramatically since about the second week in October. As for catalysts, I think there's definitely more of a calm in the markets. It's evidenced by a lot less flight to safety buying in the dollar index. The dollar index looks to be, if it stays about where it is, to have its lowest close since about mid-October.
Yeah, oil up 1%. Guys, thank you. Paul Dietrich, Matthew Cheslock, and Rick Santelli.